Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 14th of March, 2020, and we're publishing our gold and silver weekly update for the week ending the 13th of March. This past week has been tumultuous, seeing gold reach highs not seen for many years to result in one of the largest weekly price drops in its history, with almost a $200 spread between high and low. Equity markets, too, seem to move by record amounts almost every day, and mainly to the downside. And poor old silver has tanked below multiple support levels. Now, we have more or less reported on each of these this past week. On the last two videos we produced or published, namely Silver Falls Below $15 an ounce and Why Equities, Oil, Gold and Silver Fall Today and the Dollar Rises, really encapsulates what has actually happened this past week. And we've placed links to both of these in the description box below. Anyway, let's now take a more detailed look at the figures. Gold fell $145 last week, from $1,674 to $1,529, having hit a high of $1,702 and a low of $1,505, a consequential fall of over 8.6% on the week. In sterling terms, gold finished the week at £1,246. That's down just a modest, really, £36. And in euros, it closed at €1,172. That's down €111. Now, the disparity between sterling's fall and the dollar's fall is the result of sterling's weakness, having seen it move from the $1.30-31 level to the current $1.23 level, and similarly when compared against the euro, but not to such a great extent. Now, silver fell $2.60 from $17.34 to $14.74, an absolute massive decline of just shy of 15% in 1 week, having hit a high of $17.59 and a low of $14.45, a $3.15 spread between them. In sterling terms, it closed at £12.02. That's down £1.27, or just over 9.5%. And in euros, it closed at 13.23 euros. That's down 2.13 euros, or just over 13.8%. The gold to silver ratio rose from 96.5 to 1 to an incredible 103 to 1, having briefly touched an unimaginable, for some, 107 to 1 for a short time earlier in the week. But he didn't close at that level, putting paid to all the pump and nonsense to expect 15 to 1 or 18 to 1 gold to silver ratio anytime soon. Now, the Dow Jones closed on Friday at 23,185, up 1,985 points on the day, directly as a result of President Trump's declaration of a national emergency and an announcement of a considerable congressional budget, as well as the private sector assisting the government in its, what we shall call, Big C testing facilities. And we know that the announcement had such a profound effect because just prior to it, markets were falling. But overall for the week, Despite the rise on Friday, it was still down a considerable 2,679 points on the week. The Nasdaq closed at 7,874, up 673 points on the day, but down 701 points on the week, and the S&P 500 closed at 2,711, up 230 points on the day, but down 261 points on the week. Such major falls and rises experienced this past week simply goes to show how fragile and volatile investors are feeling at the moment, almost reacting somewhat abnormally or extremely at any news comment or announcement. There is no doubt that equity markets were due for a correction anyway, after hitting multiple all-time highs. Of course, the question on everyone's lips is, will it stabilize at current levels or fall even further towards that huge Dow psychological level of 20,000? Brent crude closed at $33.85, down an incredible again $11.42 on the week. And WTI crude closed at $31.73, that's down $9.55 on the week. Now, such falls were seen earlier in the week, the result of the breaking up of what was commonly called OPEC+, with Russia and Saudi Arabia now at odds over oil prices, creating really a price war, which frankly at current levels, whilst great for the motorist and many parts of industry, will be harmful to the US shale industry, which cannot produce oil at these levels, let alone sell it at these levels, and may require some form of government bailout. And finally, the dollar index stands at 98.75, up 2.8 for the week, totally reversing last week's decline and improving upon it. Now, last week we exercised some caution on the precious metals market, though we did, at least last Saturday, suggest that whilst a fallback was possible, precious metal prices were again more likely to rise than fall this past week. Then on Sunday we produced a slightly stronger warning in our video entitled Economic Thoughts Before Markets Open Tomorrow. And we place a link to that video in the description box below as well. And in that we stated, quote, "The broader market sentiment favours further upside in gold, but the daily technical chart is calling for caution. Friday's spinning top-like candle is signalling buyer exhaustion. This, running alongside the bearish divergence of the 14-day Relative Strength Index, RSI, suggests scope for a notable price pullback. Gold may be forming a double top with a neckline support at 1563. Acceptance below that level would confirm a breakdown or bearish reversal." And we also stated in last week's update, last Saturday, concerning silver, quote, "From a technical point of view, the downside area for concern is $16. If silver hits that level, then the algorithms kick in and silver will fall quite considerably." Unquote. So whilst we did actually expect a slight improvement, we were warning that a significant fall was ahead. Now, truthfully, we thought that was going to be a week or so after the Fed's FOMC announcement on the 18th of March. And even we forget sometimes that markets, aware of these dates and announcements, act in advance. And so even we have to watch out for that in the future. Well, last week, gold did open up, and for the first few hours actually surpassed the $1,700 level we suggested was likely to happen. and then it gradually fell back, with significant falls on Thursday and Friday. So much actually happened last week, with surprise interest rate announcements, or should we say, to be more accurate, earlier than expected interest rate announcements, and what we have called the Big C dominating the headlines. Some analysts have called gold's sell-off a liquidation, with support at the 200-day moving average of $14.97, with resistance at $1,550, and further resistance at the 10-day moving average of $15.79. And we would tend to agree with that assessment. However, short-term and medium-term momentum from a technical point of view is negative, and this is making it extremely difficult to predict next week's move, but we shall have a go towards the end of this video. Now, silver markets basically collapsed. Like gold, it opened up for a much shorter period of time, then fell, consolidated a little, but to the downside slightly, began falling again on Thursday and collapsed on Friday, staging a 30-cent mini recovery right at the end of trading. Now, there could be a bounce in price at some stage after such a heavy fall, and that may occur on Monday, but there is so little going for silver at the moment, except the gold to silver ratio is now approaching all-time highs and certainly all-time closing highs. But the industrial demand, or the expectation of industrial demand, is cut dramatically. And investment demand for silver, as we have stated for months, if not the last few years, will be secondary to gold, and therefore the divergence in their relative prices. Now, there is some level of support at $14.50, and further quite significant support at $14. And amusingly, those technical analysts who were predicting that the charts were telling them that silver was going to hit $20 a few weeks and then moving rapidly to $23, are now stating in just over a week to two that the price could fall to as low as $12 before buyers are attracted back into the market. Let us say something here. Providing sterling does not weaken even further against the dollar, as for us in the UK, that has an influence. And should silver fall to $12, should the technical analysts' greatest fears be accurate, we will be loading the truck up ourselves. Not on fancy coins, but buying the cheapest form of silver with the lowest premiums possible at that time. Now, one has to watch out because the bullion houses will attempt to load the premiums. But should $12 silver become a reality, it will be a screaming buy and hold for 5 years. Now, that said, whilst we can see sub $14 silver, and it might take a little bit of effort to get to that, we are holding reserve for $12 silver at this stage. Now, the global economic situation has to become much worse, and clearly much worse before we can countenance a fall to that level. However, nothing is impossible. Okay, US economic data last week was pretty uneventful, as we surmised. No real out-of-the-ordinary surprises, though worthy of note are the producer price index showing a minus 0.6% for February against expectations of minus 0.1%, showing that producer prices down, and the import price index showing a minus 0.5% figure compared with January's 0.1%. Perhaps more eventful will be this week's economic data. On Monday, we have the Empire State Index for March. Tuesday, more importantly, retail sales for February, industrial production for February, capacity utilization for February, and business inventories for January. Then on Wednesday, the day that all investors' eyes will be placed and traders' eyes, You have initially the housing starts for Feb, but the event of the day will be the FOMC interest rate announcement, followed by Jerome Powell's press conference. And obviously, again, we'll provide an update on that. Thursday, current account for quarter 4, and Friday, existing home sales for February. So, Tuesday is important, giving us an additional steer to what the FOMC is likely to do on Wednesday. Now, tomorrow we shall provide a video on what is likely to be announced on Wednesday, but there will be no surprises if there is another interest rate cut. Some analysts are suggesting 0.25% and others a 0.5% cut. Either way, the Fed will have no alternative after Wednesday than to adopt additional QE measures, unless it is prepared to move into negative interest rate territory in the near future, which we know for sure is the last thing that it wishes to do. In other words, it's more likely to embark on QE measures, further QE measures, than negative interest rates. The world is facing a difficult time. There were, and still are to a degree, a number of significant asset bubbles, all of which were waiting to deflate or pop. Banks and governments around the world have managed to stave off recession, even though traditional economic cycles demanded one based on historical trends. The Big C has put paid to that, but ironically, with the vast amount of liquidity going into the system, should we find ourselves in the position some 2 or 3 months down the line that the situation has peaked, we may very well witness an aggressive resurgence of the equity markets, simply because their fall may have been overdone. Now, meanwhile, as our Richard and Greg channel pointed out yesterday, and no doubt will continue to point out in the coming days, is that as more information becomes available, it will become clearer the true parlous state both the world and the US economies are in. However, despite this, we cannot overemphasize, and this past week has proven it, no matter how bad things are in the United States, they certainly appear worse elsewhere. And when the chips are down, the investment community still flocks to the greenback. The US dollar still reigns supreme, in comparison at least with other currencies. Now, we all know this won't last forever, but it's also not going to end overnight either. So whatever calculations you may make for investment purposes in the near future, please do not assume the dollar is dead or on the verge of collapse. Now, we can all make the case of why it should be, or is, but the reality is that it's the best of a bad bunch of currencies. So to conclude, there may be an attempted rally next week in gold and silver prices, and especially in anticipation of or after the Fed lowers rates on Wednesday. However, if they do that, they are further extending the recession argument, and frankly, that is likely to do silver more harm than good. Now, for those of you currently feeling depressed, look at this as a great opportunity to acquire even more at prices none of us really thought possible yet again. But doing so, please, for the medium to long term in mind. Now, in the meantime, do follow our Richard and Greg channel, as well as this one, of course, not forgetting to subscribe to each and pressing the bell sign, so that you are notified of new videos as and when they are published. We trust and hope that you have a most enjoyable weekend and prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.